All right, welcome everyone, and a big welcome to our guest of honor, Dr. Andrew Menaker. How are you, Doctor?
I'm doing good, John. How are you?
I'm doing well, doing well. It's my one of my favorite and most important parts of the month is when we have the opportunity to sit down and chat.
Yeah, me too. I look forward to it.
Glad you are here. I'm gonna introduce you as usual. We do this every time, but your name precedes you, Dr. Andrew Menaker, licensed clinical psychologist with a PhD in psychologist. More of a stretch than a shrink. Since 1995, he's been a performance coach for top money managers and professional traders. What makes the good doctor so special is that he's also recognized an experienced and successful trader himself and a recognized expert in emotion management and intuitive development. I'll introduce myself and we'll get started right away. I'm John Hoagland. Been around the industry for just a few years. It's been a interesting and challenging migration to screen trading, but it's been a pleasure to be with Topstep since about 2011. Now, Doctor wanted to talk today about more about goals. Now, we've discussed goals in the past, and he says that P&L goals are some of the more dicey goals that we tend to put in front of us in trading. Doctor, tell us about that.
Yeah, it's a real conundrum, John. Why did we trade? Why do we come to trading? It's to make money, of course, right? That's why we do this. And so it's natural that because the attraction is to make money, it's a very natural thing to create kind of money goals or goals around P&L or make a certain amount of money by a certain time period or something like that. It's a natural extension of the fact that that's why we're trading. The problem, and it's a really big problem, I come across this a lot in my one-on-one coaching. I come across it in my own participation as a trader, investor myself, is that when someone has an idea of about a certain amount of money that they want to make, whether it's on a daily basis, a weekly, monthly, quarterly, or just achieving a certain amount of money by a certain time period, it invariably, I would say, well, I'll say pretty much every time, ends up tripping the person up. It's tripped me up before many times. It forces us to trade differently. We're no longer trading what the screen or what the chart is showing us. We're now trading our P&L more than ever. I think we trade our P&L all the time to various degrees, but if we're stuck on a P&L goal, especially if it's tied to a certain time period or a certain, calendar date or something like that, then we're trading our P&L just even more so.
Instead of trading our process,
Instead
our strategy,
of trading the process, trading the market versus trading the P&L. And I think it takes us away from trading the market and more towards trading our P&L, which is already a problem anyways, because that's why we trade, is to make money. And I guess what I'm saying here is that it's generally not a good idea in my professional experience as a coach and as a trader, both. I speak from both perspectives here as I've experienced it myself. It's generally not going to be helpful. As a matter of fact, I think it's actually very counterproductive to have a specific dollar amount in mind that you want to make.
So there's a lot of paradoxes in trading. This is just yet another one of them. And in my experience as well as having a daily P&L goal or a weekly P&L goal or a monthly P&L goal, it takes you out of your strategy. I mean, I've been 2 ticks from a daily goal and absolutely blown up the entire day.
I mean, so many of us have done that. I've done it. I think many people have done that. Yeah.
Just because I need those last 2 ticks so that I feel like I reached that goal.
You want to reach a certain number, right? You had a number in mind. Some kind of anchoring bias was happening. Yeah.
And that the P&L, I guess, you could consider it the ultimate report card for how you're trading. I mean, we're here to make money. If we're making money, that's the report card or the guide or whatever it is by which we decide how well we're doing. But in trying to reach that goal, we take ourselves out of our strategy. And when we do that and things go bad, it tends to create emotional responses and
Mhm.
impulsive responses. And it just seems to go south from there.
Exactly, exactly. Yeah, very, very, very well said. It's a huge problem, and I will say that when we have that number in our mind, that we want to make a certain amount, it just becomes, it ends up dominating how we see the market. We start seeing opportunities that aren't there. We start manufacturing trades. Um, we, one of the things that I do in my one-on-one coaching is I teach people a certain specific format of journaling. I call it drill down writing. It's a certain type of live journaling when you're in the moment, in the heat of the moment. And I'm thinking of a specific client I've been working with who has he's shared with me that he's got P&L goals and he even has a certain amount of time that he wants to achieve it by, but he also recognizes that it's not a good thing. And so we've been working on it. And when I look at his drill down writing, he sends me excerpts of his journal, I don't see the presence of his concerns about the money in there, but he trades like it's there. And so I finally had to ask him, I said, look, I mean, it seems like you're really trading for that number anyways, even though you're not writing it. But he kind of admitted to me, yeah, it's there in the background. It's always there for him. And this is something I think that's present for all of us to varying degrees. It's really hard to just stay focused on following our process, which is, for example, what is the market showing me? What is the actual true opportunity set here in front of me versus what are my own personal needs saying in terms of how I want to make money? And you said something really interesting, John, earlier about how the money becomes like our report card, right? It tells us how well we're doing. And
Mhm.
that's a really big deal, because if you don't make money, then you'll feel as though you're not good enough, you're not doing well. And that could be completely not true. You may have traded very well, followed your process, but ended up not making money that day, being red. And that's using the money amount, letting our P&L become the referendum, become the arbiter of how we feel about ourselves and how we feel, how good we are as a trader, or just how good we are in general. That therein that's the kernel, that's the core of the problem right there, actually.
So, when you said something I've said for years, we'll manufacture opportunities just to see if we can reach that goal.
Mm-hmm.
If we're not manufacturing those opportunities to try and reach that goal, excuse me, I apologize. What are some of the things that we can um, understand about markets that are not necessarily going to follow our desire to make a certain amount of money in a certain time? I mean, certain market states are just not conducive to making a
Mm-hmm.
specific amount of money. Maybe the market's not big
Mm-hmm.
enough that day.
Exactly. And exactly. And there's even on the other side of that, there can be markets and conditions, of course, that there can be huge opportunities. And why would you want to stop once you reach a certain dollar amount? You could make more. So it works on both ends, both sides of it, for sure. Most definitely.
And
I mean,
there's
many of the best traders that I know have have what people would call, or I call it a lumpy P&L. I mean, this idea of making a steady amount of money every day, that's not what I personally have seen the greatest traders that I've ever known
and it's not
accomplish.
realistic, is it?
Not, no, they have periods where they make a lot of money, then long periods where they're not making money at all, they're flat, or maybe even they're down a little bit, maybe a few short periods where there's an actual drawdown, but then other short periods where they're making a lot of money. And it's not this consistent, perfectly angled equity curve at all. It doesn't never looks like that for the great traders.
The lumpy P&L. I'll take a
Lumpy
lumpy. I'll
P&L.
take a lumpy P&L. I'm
Yeah,
all right with that. It's
yeah.
like,
I mean, kind of scalloped. Maybe think of a stock chart, kind of scalloped. Goes up, comes down a little bit, consolidates bases, goes back up, something like that, as opposed to just people are expecting this kind of steady up and to the right
Oh,
45-degree angle or whatever,
oh, if
kind of an
only,
equity curve.
if
Yeah.
only we could do that.
Yeah. Yeah.
But it's more like 3 steps forward, 1 step back, 2 steps forward, 1 step back, 4 steps forward, 2 steps back. I mean, that's a
Very much so.
more of a
Yeah.
realistic kind of the way the markets rally, right?
Very much so. Yeah, exactly. Yeah, exactly. I think you want if you want a sustainable career as a trader, you want a nice equity curve, and it's similar to if you want to own a nice stock for the long term. You don't want a stock that's been moving up parabolically because it's not going to sustain like that. You want something that kind of moves at a nice kind of pace, has a little consolidation period, some
Yeah.
kind of that. So it's very similar to like to a nice solid long-term bullish stock chart, actually very similar.
And you try and buy that stock on a nice little pullback, and don't take a lot of heat on it, and things keep going well, right?
Exactly. Right.
Um, we've had a lot of discussion lately about, and this kind of goes along with the goals. Don't you think that, well, we all have habits, and some of them are going to be helpful for our P&Ls, and some of them are not.
Mhm.
A good goal for a trader, don't you think, would be making a goal of trying to break down some of the bad habits and at the same time try and create good habits in trading?
Yes, and here's a good habit that I would suggest people consider developing for themselves. There's a lot of habits we can have, but one really important one that'll help people a lot is to learn how to look at and evaluate the outcomes, which is, did you make money or not make money, that kind of thing, your results separately from your process, your decision making, and learn how to separate. That's how you separate process from outcome. And that's what we have to do in trading in order to not personalize the P&L, to not let ourselves feel as though we didn't do well because we lost a certain amount of money today, or we're a great trader because we made a certain amount of money today. That's meaningless. You may still be a great trader even though you didn't make that, even though you made less or you made nothing or you lost money, and you may be a lousy trader even though you made money. So being able to separate process from outcome, and we do that, a major step in doing that is evaluating them separately.
Each trade gets a a grade for how in process it was.
Decision making quality, I think of it that way sometimes, right? Exactly. How much was I following my plan, my strategy, sizing? Did I front run? Did I get in late, early? I mean, there's a lot of ways you can look at that, a lot of kind of ways to measure that. But that's part, that's what we have under our control. That's the process, and we need to learn how to evaluate that and make good on evaluating it consistently. And then when we have an
That's a
outcome,
challenge right
separate
there.
that. Yeah, separate the outcome. Separate the outcome, because you may have
People,
done all the right things, and if you ended up losing money, it's important to know that, because if you did all the right things but you ended up losing money and you're not separating your process versus outcomes, if you're not evaluating them separately, you're going to feel lousy on those days, and then the next day you're going to be less inclined to follow your process, your strategy, because the previous day it lost you money, or you feel like it lost you money. So it sort of becomes a real problem that cycles over and over and over.
and if you have a process that you've proven maybe even sometimes over years, and you hit a down cycle in it, it's hard to continue to trust that process because
Mhm.
it's left you high and dry a few times. How do you keep that confidence? How do you trust the fact that that process is going to remain good?
Well, it's a big question. I mean, of course, we have to always consider, has there been a change in the context of the market? And there's a lot of ways to answer that. I mean, some people have various involved strategies and how you're trading, what style you're trading, and what asset class you're trading. So there's a
Mhm.
lot of different ways to answer that. But yeah, I would say, first thing is you want to rule out, kind of like a physician or a doctor, you want to rule out it's like the differential diagnosis. Was there truly a change in how the market's trading, and some kind of regime change, and that may necessitate somewhat of a change in one strategy. If that's not the case, if it's still just the market doing what the market does, which is usually what's happening,
Hmm.
um, then yeah, you need to be able to have enough ability to tolerate the frustration, the disappointment, the anger, whatever emotions come with the drawdown or the loss, even though you did follow your strategy.
Doctor, I'd like to go back and kind of go over something that you mentioned just a few minutes ago about back to the like the daily P&L goal or weekly
Mhm.
P&L goal. What if the market is bigger? What if you're in a situation where you've reached your goal and there's still
Mhm.
much to go in profit
Mhm.
or profitability or potential profitability? A lot of folks, will say you have to trade, throughout the day until something happens or you get a specific drawdown of part of that day. And I'm all for that. But if you, just as an example, you have a streak where you've had like a good month, and your best trading day in that month is, for example, $1,200, and early in the trading day you've usurped your best trading day for the last 2 months and you're up $1,500. Is there anything wrong with saying, okay, you know what, that's the best trading day I've been able to put up in 3 months. There may still be opportunity. I may lose part of that. Is it
Mhm.
okay to walk away in that?
Mhm. Definitely. I mean, here's the thing that there's a lot of reasons why it might be okay to continue to trade on a situation day like that, and a lot of reasons why it may not be the right thing to do. It's different for each person. An
Mhm.
example could be, if maybe your energy is a bit low, or you're tired, or you're just more excited than usual, or you're just not in that centered place, mentally speaking. Then for either positive or negative emotional reasons, we may not be centered, kind of high or kind of low feeling. That could right there could be reason enough to say, yeah, you know what, I'm going to end. This is a good place to stop for the day. Um, so yeah, there's a lot of different reasons, and it's not black and white. Should you end just because it's a certain time of the day and there's more opportunity? It's not a yes or no. It depends.
I love that answer because I think it really reminds us that mental capital is not only used on down days.
Exactly. It gets used on up days. You get excited and get overconfident. I mean, this is why you see this a lot of educators or chat rooms or what have you, people teaching trading, they love to kind of suggest to people, well, we'll teach you how to make a certain amount of money per day and you'll be set up for life. Don't worry, you don't have to make more than this. You don't have to make less, just a certain amount. And then they usually come up with a very reasonable sounding number, $500 a day or something like that. And it speaks to, it's very attractive because it speaks to this idea that a lot of people think trips them up in trading. They think they get too greedy. And because of their greed, they end up giving the money back and they never get anywhere. Oh, so, but if I can learn how to just make $500 a day, it'll put my greed in check and then I'll be fine. Well, that's the theory, but it does not work that
Uh,
way. It does not work that way. Yeah,
no, if I can make 500, I can make 1,000.
exactly. So this whole idea of making a set amount per day, right there, when you see that kind of a um, process, or I should say a promise or idea, or someone's making that suggestion to you, or that it's possible, I think that's really dangerous, in my opinion.
Well, in my experience, I would agree with that.
Yeah, but
You know,
it's so tempting. I mean, it's a sexy thing. It's compelling. It's interesting, and it attracts a lot of people. It really does.
the um the thing that I lost it, doctor.
It's had a question or something, or
Yeah, no, I got so many things running around in my head and I lost them.
oh yeah.
Um, what was it? Oh, I know what it is. We really have to resign ourselves to the fact that the market is going to dictate what we're able to make on any given day. To some degree.
Mm-hmm. Mm-hmm. Yes. Yes.
If
Yes.
we come into the day thinking, okay, today's the day I'm going to hit that home run, That's when the greed comes in.
Yeah, I mean, I've often had many of my best days on days that did not start off, but I would think that was going to happen.
Uh-huh.
And likewise, I've had many of my worst days on days where I thought it was going to be a great day.
Mm.
So yeah, anything can happen.
Some of the best trades I've taken weren't expected and largely taken just because they were cheap.
Yeah, yeah.
Um, I think my mental capital's a little used up. I keep losing what I was going to say or what I was
Yeah,
going to ask you.
that's okay.
Um,
We've all been there.
so, all right, to kind of go back to, creating a goal to work on habits that, I mean, I guess it's kind of hard to be able to distinguish. Some of them are going to be easier to distinguish what's a habit that's not in our best interest, and there's going to be ones that are going to come up over time that you say, these are things that I've found have been in my best interests, and I have um to add those and work on those as much as I can. I was at in a seminar last week, and we were talking about creating habits. And now I don't know if you're in agreement with this, but they were saying that it takes 66 occurrences to create a habit.
There's a lot of people, let's say it's 3 weeks, it's this, it's that. I've seen a lot of different types of research and on that. I don't think there's any one definitive number. I really don't, because I've seen a lot of variation in the research. I think when someone has an idea about it takes X amount of occurrences or events or hours or days, um, personally, that to me is a bit more of a marketing kind of a thing, because I don't
Mhm.
really think the brain follows that. Brain is much more complex, very complex. Some habits, some things can come, I think, shorter than that. Others are going to take longer. I don't think it's fixed. That it has to be 66 occurrences for a new habit to be established. I think that's just very simplistic.
It seemed a little finite to me.
Yeah,
But
yeah,
when we're talking
uh,
about trading,
yeah.
you're gonna have occurrences where you may have this occurrence to work on that habit once a day or even once a week. It's not like, if you're
Mhm.
trying to quit smoking and break that habit, every time you look at that pack of cigarettes, you're getting an occurrence of changing that habit as long as you don't pick it up.
Right, right. Yeah, I guess it depends on how you count the events, right?
You could have 66 occurrences of that in one day if you're trying to quit smoking, but
Mhm,
when you're
mhm,
trying to create a good habit or take the power away
mhm,
from a bad
mhm,
habit in
mhm.
trading, it could be 6 months.
Yeah. One thing, and I think I may have saw somebody who put a question in the chat room earlier. I glanced at it. I'm not looking at it now. Something that I think the person mentioned, and something I certainly come across a lot in my coaching, and I've experienced it myself, in my own trading, is that I'm sure a lot of people listening will relate to this, that many people can trade fairly well for a few weeks, 2 weeks. By the second or third week, definitely by the third week, it's many people cannot go beyond 3 weeks of solid trading. Really, really, really common. So that brings up the question: what happens at that third week? Um, and there's a lot of different. I have a lot of different ideas about that. I don't think it's any one particular thing, but it is something that I see all the time. So if you're someone who knows that you can do okay 2 or 3 weeks, and you end up giving all that money back, and then you start the whole cycle over again at some point, 2 or 3 weeks of good trading, and then you give it all back. You need to recognize that for yourself, and you're going to have to make some real decisions. Like, one possible decision would be this: if on the next upswing, if it's actually gets your account above a level that it hadn't been at before, maybe you take some of the money out before you hit that 3 week mark, so you can save some of the money. That has a huge impact on our psyche when the money becomes real. It's no longer just the monopoly money, arcade money that you sort of see in your account, just a number flashing on a screen. It becomes real money once it's in your bank account. So that's one kind of practical way of dealing with this. But again, anyone who has experienced this, and it's probably many people who are listening, 2 3 weeks of decent trading, besides what I just suggested for that practical tip, about taking some of the money out of your trading account is to honestly, you have to look at yourself and was it really good trading for that 2 or 3 week period? Or were there some crazy hair on fire impulse trades that you ended up making money on? Because a lot of people think they're trading well just because they're making money. That's, the resulting trap that people are familiar with from poker and other areas. Just because you made money does not mean you were trading well. So you have to be honest. In that 2 or 3 week period, were you trading well to make the money or not? If you were trading well and following your plan, then, and if you reach kind of a new high watermark with your account, I would suggest for that person to consider taking some of the money out.
Yeah, it's one of the things that I think we learned early on in the pits. If you have a good period and your account is swollen, you got to take some out, because number one,
Oh yeah.
you're going to know it's there.
Oh yeah.
And
Oh
you're
yeah.
going to increase your risks, and that sometimes has some tragic results. And another way that I kind of relate to this is I found myself, if I had a good winning streak, if I was, however I was trading, if I had 2 weeks of consistent winning days, I started to find myself putting pressure on keeping the streak going. And that one day when the first trade is a loss, I would end up giving back, sometimes all of the streak in one day, just because I was demanding to keep the streak going.
Yeah.
So
Yeah.
Miguel, I know this is your question. When you get to that level, and if that's part of your issue, break the streak yourself. Take a
Yes.
day
Yes.
off.
And maybe take some of the money out as well from the streak. If your account really, swelled up. That's what I do. If I've had a nice period of trading, account gets nice, has a nice new higher number on it, I'll take some of that money out for sure and kind of break my streak myself.
Mm-hmm. Yeah, I ended up, having to just take a day off. That breaks the streak. I don't put myself at risk, and I can start a new streak the following day.
Most people won't be able to do that though, John. I'm just being realistic, because they get excited. They see the money and they think, oh, I'm finally getting somewhere. I'm finally going to make it. Why stop now? And this is the quicksand of the market that you will fall into. And let me just tell everyone who's listening that the trading highway is littered with along the sides of people just like that, and you're not going to be any different.
Yeah, I'll be honest with you, Doctor. It wasn't the first time that happened that made me start to take that day off to break the streak.
Yeah.
I had to learn over and over again.
Yeah, it takes, and many people never learn it. Some others take a long time to learn it. Others learn it a little bit sooner, but yeah, it's a lesson that has to be learned at some point. Yeah.
I kind of file it into the dangers of the what if factor.
Exactly. Yeah.
What if tomorrow is going to be a great day and I take it off? Well,
exactly. And it's, what if tomorrow's a lousy day? What if anything, anything can happen at any time, not just with the market, but even with ourselves, right? We're capable of, the wheels can fall off the bus at any point.
One of the things my dad used to say, he was a board of trade member for 40 years. I could double my income if I could just work 3 days a week.
Yeah. Right.
So, well, why don't you? He said, because I don't know which days to take off.
Yeah. Yeah.
He was a smart man. Doctor, I know that you're pressed for time today. I don't want to keep you too long. We're going to let you go. Thank you so much for joining me today. Our next market therapy is on Wednesday, September the 8th. We'll look forward to seeing you there. And, as always, we all appreciate your spending some time with us, and know you're a busy man, and we will look forward to seeing you in just under a month.
Sounds good. I'm looking forward to it myself.
Awesome, Doctor. Thank you so much again. Have a
All right.
great day.
Yes, you too.
Trade well, everyone.
Bye-bye.